Hello, good morning, ladies and gentlemen. You're highly welcome to yet another promising session on my morning live as we are going to be reviewing the pairs that we have been monitoring since the beginning of the week in anticipation of the London and the New York session today. And first of all, I would like to say I'm sorry for coming in late. I've been having some internet issues, which so I had to swap my router to the one that is available, and this took quite a time before I got my network triggered. So I'm so sorry once again, and welcome once again. And for those who are joining us for the first time, you are also welcome. And what we simply do here on a daily basis is to, during the course of the weekend, I normally share a series of publications where I choose pairs that we are going to be monitoring for the week. And so I have a detailed review of these instruments, and you can check them in the description box below. The USDJPY, the XAUUSD, the GBPUSD, and the USOil. So these are the four major financial instruments that we are going to be monitoring this week, and I dissected that chart in details from the higher time frame down into the 4 hours time frame, and we also identified how to take position ourselves ahead of any potential trading opportunity. So during the live session, morning live session like this, what we simply do here is to review and analyze the 1 hour time frame, which is our execution time frame, in anticipation of what's the expectation for the day is going to be like. So once again, you are welcome. That's what we simply do here. So I have the link to the comment to these videos in the description box below, so you might want to check them out after the live session. And I also made things very easy for you, so there are timestamps on that video. If you click the description box, you will see the timestamp, so you can easily navigate to whatever aspect of the video you want to be focusing your attention on. So on that note, I welcome you guys once again. Please let me know you can see my screen and you can hear my voice by typing hi in the comment section, or say good morning or whatever, and we shall be good to go. So let me know in the comment section if you can see my screen and you can hear my voice clearly. All right, I would. And you can hear my voice clearly. Akshay Amin, good morning to you. Thank you very much. Daily, good morning to you. How are you doing today? And trust you are doing well. I didn't see you yesterday. Hope you're fine. All right, so I will take this as a positive feedback that we are good to go this morning. So with that being said, here, let's dive right into the business for today. So you all know what we do here. The first thing we want to be doing is to keep tabs with the fundamental aspect of the market by running through the economic calendar to see if we do have any macroeconomic event we are looking forward to today. And obviously, when we have high impact events like this, majority in the market will be looking forward to this, and we shall be seeing the reflection of the anticipation on the chart as a consolidation phase where majority in the market, most especially the key players, would have stepped out of the market waiting for this event to come up, and whatever data or reading comes in will now determine if we are going to be going bullish or bearish. So it's a very, very important thing to do. Despite whatever technical position we have in the market, we still need some catalyst to drive price action, and this always comes in the form of this fundamental event. So on the economic calendar today, after looking at the list of high impact event, what we are going to be focusing on today is the GBP, that's the pound sterling, affecting the pound sterling, and we have a couple of macroeconomic events for the pound sterling, which has already happened during the early hours of today. And the first one here is the claimant count change. This presents the number of unemployed people in the UK economy, and a higher reading is somewhat a negative tone, and a lower reading is something of a positive tone for the pound sterling. And sorry about that. And if you look at the data that came in this morning, we have 28.2 thousand as against the consensus of minus 11.8 thousand. So this is a very, very high reading, hereby a negative perspective for the pound sterling, and it appears we haven't seen that effect on the chart recently. We are going to be looking at that in details in a moment. Then we also have the higher low unemployment rate, which is released by the national statistics. Is the number of unemployed workers divided by the total civilian labor force. And just like the claimant count change, a decrease of the figure is a positive one and a high figure is a negative one. And look at what we have here. We had a 3.8% actual data, which is actually higher than the consensus projection, and also even higher than the previous data on the ILO unemployment rate, which is also on the negative side for the GBP. And as a result of this, and since we are monitoring the pound sterling against the US dollar, are we going to be seeing a bearish momentum continue to the downside, or price action will actually react positively to this event? So these are things we are going to be looking at. So I implore you to stay tuned in, be with me through to the end of the session, so that you don't miss out on any of the ideas that we shall be sharing during the course of the session. And if you have any questions whatsoever during the course of the live session, feel free to drop your inquiries in the comment section, and trust me, I am willing to be of help. So with that being said, here let's dive right into the business for today. And the first commodity we are going to be looking at today, as usual, is the US oil. And in fact, the US oil started the week on a very, very bearish note, as we saw how price action had continued to find lower lows and lower highs since yesterday. And in fact, I would like us to quickly have a review of what our expectations were yesterday before we begin to see the situation that happened here. And if you remember, at the beginning of the week, we also took into consideration what was happening on the 4 hours time frame, where we were able to identify a simple setup that we thought we can use to guide our trading activity for this week. And if I scale up a little bit into the 4 hours time frame, this was what we were able to identify on the 4 hours time frame, where we saw price action has been trading within that $81.50 level and the $79.50 area before we saw the breakout of the structure during the course of last week's trading session. And this was a very theoretically, this is a very bullish signal, where price action retesting the structure was a potential sign that price action could continue to the upside. So we were looking forward to a bullish expectation actually at the beginning of the week. But one thing we did, you know what we do here, we don't jump into conclusion, as we still need some confirmation to happen before making a decision. And as a result of that, what we did here was to look at how participant in this market has been reacting to this current structure to determine if we are actually going on the bullish side or we are going to be selling the US oil. And what we simply did here yesterday was to take note of what has been happening since the beginning of the week, and we found out the tone of the market as we saw price action started the week on a choppy situation, where price action was initially trapped within the $82.60 level and the $82 $82.20 area. And you all know what we look out for whenever we have this kind of simple setup. We want to see price action either break out of that channel to the upside for buying opportunity or break down the channel for selling opportunity. And I told us all yesterday that because of the tendency of the bullish momentum here after citing the buy pressure around this area above that our key level had the $81.50 level on Friday, I was of the opinion that price action will be going bullish. So I told us yesterday that we should be having a buy stop order above the $82.60 level. And obviously we don't stop at that, as we also want to take into consideration the potentials of the sellers. And during the live session yesterday, we saw this engulfing candle that actually broke down that $82.20 level, which happened to be our support line for the week. And in fact, this was a signal that sellers were likely coming in. But I told us all that we are not jumping into conclusion at this point, as we still need some confirmation to happen, and this is likely going to come in the form of a retest of the structure on our lower time frame. Selling pressure resume around that area, and we shall be ready to be part of that move to the downside. And this was exactly what happened after our live session yesterday. We saw price action come back to do retest of structure. We saw selling pressure, so with a sell stop order below the $82.20 level, we had our first sell position for the week triggered. And since the first sell position triggered yesterday, we have seen our price action has moved over 150 pips in profit. So you would have been in a minimum of 150 pips here, though we had multiple entries as price action continue to break down key structures like the $81.75 level, which I duly identified on my public platform yesterday. And we also had the breakdown of the $81.50 level, which happened to be our key level for the week. And just recently this morning, I emphasized that we shall be adding more position at the breakdown of the $81 MAC, as you can see here. And if you had been with this instruction so far since the last 24 hours, you will currently have about 4 positions running in profit right now. And if you have been part of this move, well done to you. Kudos to you for being on standby to have caught this opportunity. And one thing we want to be doing right now, you all know what we do when we have price action move significantly in our favor. The next thing we want to be doing is to secure the current position by locking in some profit, moving our stop loss accordingly, locking some profit, as we don't want to lose out on whatever we have made so far. And at this point in time, my most appropriate area I think that we can move our stop loss to at this point is somewhere right around that $81 MAC, as we want to give price action room to breathe, probably in anticipation of another trend continuation to the downside. So at this point, you want to be moving your stop loss anywhere right around the 81 or above the $81 level. Secure this current sell position we have here as we continue to monitor price action. And before I go into the details of what our expectations should look like for today, I want us to quickly look at the my public platform, that is the TradingView platform, where I keep sharing the updates, and on the same time I share it on the Telegram platform too as well. But I will refer to the TradingView platform, and let's look at how we were able to take advantage of this opportunity yesterday for the sake of those who are not part of our live session, and how we have been running this since the beginning of the week. So this was how it all started. This was prior to our live session yesterday, where we saw this consolidation phase happen. And you all know what we look out for whenever we have this kind of setup. We want to see price action either break out of that structure or breakdown of that level for trading opportunities. And we had the first sell position triggered there, and you all know I'd identified a simple line here at the $81.75 level, where I said we are going to be adding more position. And I also had another one here at the $81.50 level duly identified around this area. Now we saw the situation continue like this, and during the early hours of today, this was just about an hour ago, I shared that I said secure all sell position as we look forward to another breakdown of that $81 level to join that decline to the downside. And this was at this point we had our sell position triggered for the 4th time this week. So it has been quite a profitable week for us on the US oil so far. So what we are going to be doing, like I said, move your stop loss to anywhere right above the $81 level as buyers could still take over this market. So at this point in time, what is going to be our plans for today? What are we looking out for to be part of either a bearish move or a bullish move at this point? So the first thing I would like to emphasize here is that note what has happened here around the $80.50 level. We can see as soon as price got into the structure during the later part of the New York session yesterday, we saw the resumption of buy pressure around that area. So it is very important for us to map that out at this point, as it might likely be a key level that we are going to be using to guide our trading activity for today. So bringing out our line chart at this juncture, I'll try to map that out. You can also map that out on your own chart so that you can have a point of reference just in case price action comes into that structure. So we have something like this here. So we have let's place it at the $80.63 level. Akshay Amin is asking, can I short the US oil? Well, we don't just short we don't just short instruments like that. We don't just short or long the instrument. We have key structures that we look out for, and that is what we are trying to look out for right now. So once you've missed one, you have no choice than to remain patient to wait for another opportunity before joining any rally or decline at this point. So if you had missed all the opportunities we had so far in the last 24 hours, my advice is that you just remain patient, listen attentively to what we are saying here and how we want to position ourselves ahead of both the London and the New York session today. So you're not just shorting right away. We want to wait for structures to mature before we want to be joining any move right now. So we have the key structure here at the $80.64 or 62 cents. Let's put that 62 cents here. So we have $82.62. All right, so that's another structure for us at this point that we are going to be using to guide our trading activity for today. So I think it's $80.60, I guess. $80.60. Okay. So now look at what we have here, and if we take into consideration the impulsive move that led into the $80.60 level, you will see that we have a simple structure right now that looks more like a consolidation phase where price action appeared to be trapped within the $81 level and the $80.60 area. So at this point, we might likely be seeing a trend continuation to the downside if price action breaks down, retests the $80.60 level, and then we could join that decline to the downside. Then another thing I would like to state here is that there is still also the potentials of buyers coming in at this point. As you can see, during the New York session yesterday, we had multiple rejection of the $80.60 level, giving us a clue into the presence of the buyers at that point in time, and this has actually led to a breakout of that $81 level, but that momentum didn't last long before price action dropped back below the $81 mark. So there is still a potential of buyers coming in at this point, so we need to be very, very careful here. So let us first of all talk about the potentials of the sellers in this particular market. So for us to sell the US oil, and for those who are already in this trade and you want to be adding more position to your existing trade, I would rather see price action break down the $80.60 level first of all. Then when this happens, I want to scale down to my lower time frame to look out for a confirmation that will give me that leverage that sellers are gradually gaining momentum. And what we want to be seeing on the lower time frame is something like a retest of structure where selling pressure resumes below the $80.60 level as buyers find it difficult to climb above that structure. Then at this point we want to be joining a decline to the downside. So it's a very simple thing here. So we want to see price action break down the $80.60 level. And the reason why we needed price action to break down that structure is simply because of the buy pressure we noticed here during the New York session yesterday. So a breakdown of the structure here will give us some signal that sellers are gradually gaining some momentum here. And for the sake of the live session here, what we are going to be doing is to scale down to, let's say, the 50 minutes time frame in this case scenario here, and look out for a breakdown. See price close below this level. As you can see, price is yet to close below this level in the past, as you can see here. So we can see that price is yet to close below that level. So what we are looking forward to right now is for price to close below that level, and if it does close below that level, to confirm that this is not a false breakdown, we want to see some retest of the structure, and then we join that decline to the downside. So this is the only way we are going to be selling if a breakdown of that $80.60 level happens. Now, there is another thing about this current structure here. We could still see buy pressure resume again, just like it did yesterday, and bring price back into that $81 mark. And you all know from a technical standpoint, whenever we have a breakdown of a key structure like this, remember we had the breakdown of this bullish trend line here. Just a couple of hours ago, we saw the breakdown of the structure. So there is still a chance that sellers could still come back into that structure, and if it does come back, a retest of either the trend line and that resistant line at the $81 mark will give us an opportunity to sell, after which we can now have a sell stop order below the $80.60 level. So at this point, we don't need to wait for a breakdown of the structure to happen anymore, as the momentum here will be strong enough to slice through the structure. So we'll just have a sell stop order at the $80.60 level to join that trend continuation to the downside. So for today, we are looking forward to bearish momentum on the US oil. And if you have any question along the line, please feel free to let me know in the comment section. I understand that you might feel uncomfortable about it, but just let me know, and rest assured I am willing to be of help in that regard. So that is how we are going to be selling the US oil for today. Now we already have a breakdown of that structure. Now we need the candle here to close below that structure to give us a sign that sellers are now strong to join, to be part of. It's now strong enough for us to join that bearish move to the downside. So that's what we are waiting for at this point. So patience is hereby required at this point. So that is that on the US oil. That is how we want to be selling the US oil for today. Then another thing I would like to state here is that like we always do, we want to also consider the potentials of the buyers in this market. So what happens if the selling expectation we just identified here does not happen, and instead price action continue to find higher highs? Well, if price does continue to find higher highs at this point, we would have no choice than to look out for buying opportunities, but we'll still need some confirmation that will give us that leverage to join a long position in this market. And that will come in the form of a breakout of that $81 mark. So I want to see price action climb above that $81 level, and then we look out for buy pressure above the structure, above the trend line. We want to look out for buy pressure where we see signs that sellers are finding it difficult to break back below the $81 mark, then at this point we want to be seeing it as a very good signal to join a bullish momentum, and the breakout retest of the $81.50 level, which happens to be our key level for the week, will now give us that confirmation that a bullish momentum is about to start for this week. So that is how we are going to be buying. So we are going to be looking out for buying opportunities anywhere above the $81 level, which also shares a confluence with that bullish trend line. So that is how we are going to be buying the US oil for today. But be rest assured that I will be with you in the comment section on my public platform, that is the Trading View, and the Telegram platform. If anything strange happens on this market structure, I will be giving you an update in that regard. Ask Akshay Amin. All right, you're welcome. Okay, I hope my explanation is clear. If you have questions, let me know in the comment section. So I will be moving on to the next pair at this point, and that is the GBPUSD, I guess. Yes, the GBPUSD. And on the GBPUSD, we had a sell position during the New York session yesterday. I think, was it during the New York? Yes, during the New York session yesterday. I think a couple of hours into the New York session, we had our first sell position on the GBPUSD triggered, and this was what we identified before. During the live session yesterday, we saw our price action started the week on a bearish note. As we can see, we had the resistance line at the 1.24200 level at the beginning of the week, and you saw our price was trapped within this channel between the 1.242 and the 1.23840 level. And one thing I stated here yesterday is that, okay, we were around this area yesterday after citing the breakdown of the structure. So I said, let's wait for price action to come in here, and then anywhere below the 1.240 level, which I duly published on my public platform, we are going to be selling from that level. And in fact, price action moved about 50 pips thereabout before this bullish momentum came in to take us out of all the sell position we were in, and we closed it up with some small profit there, and at a worst case scenario, you must have closed at break even. Now during the live session, during this morning, I saw the bullish momentum continue here. So it appears that buy pressure has resumed. As you can see here, price action was unable to find a new low, as instead we had a higher low at this point, though I missed the situation here because this happened in the middle of the night and I was still asleep at this point. If I was awake, I would have taken advantage of that opportunity, but it's okay. We saw price action continue to the upside, and during the early hours of today, I shared a publication on my public platform where I said we are going to be buying the breakout of the 1.24200 level. Remember, this level has been a strong selling niche since the beginning of the week, so a breakout of that structure will be a buy opportunity for us. Now let me show you what I said on my public platform. So this is what happened during this morning. So this was my commentary this morning. I stated here that, okay, this is it here. I said, following the negative readings from the economic data from the UK docket, price action takes out the sell position with a small profit, as it is currently trading around the resistance line for the week at the 1.24200 level, which also shares a confluence with the trend line that was broken at the beginning of the week. So we are going to see how price reacts to this level to determine what our next line of action will be. And as you can see here, I illustrated on the chart that we are going to be buying a breakout retest of the 1.24200 level, and this is exactly what happened. Price action has broken out of that structure, and right now we are in a buy position. I'm running with about how many pips is that? We have a buy position running with about 16-15 pips in profit at this particular point in time. Stop loss will be somewhere around the 1.2400 level, which happens to be our key level. So to give room for price action to breathe, I will suggest that we have it a little bit lower, which will be dovetailing to about 20 to 25 pips stop loss. Now our TP target at this point in time could be around the 1.2550 level, which was a strong selling niche in the past, and let's see how far that will go. And if that is going to be the case here, we are looking at a minimum of 130 pips to catch if price action moves significantly in our favor. Now, one thing I would like to state here is that as soon as price gets into somewhere around the 1.24460 level, kindly move your stop loss to break even, lock in that profit, and let's feel free to see how price action will move afterwards. So on the GBPUSD, we remain on a bullish expectation for today. Now, in order to give us that leverage or that confidence to still stay in that bullish move, I want us to also identify and connect the series of higher lows in this market, which is this structure we have here, which will definitely be our yardstick for trading activity today. So as long as price remain above this trend line, we want to feel comfortable in our buy position. So I would like to make this bolden this a little bit so that it is clearer for us to see. So this is what we are going to be using as our yardstick today. So as long as price remain above this bullish trend line, we shall remain comfortable in our buy position. So there is a tendency that price could still come back into the structure at any point in time to inside the second wave, and if that happens, I will be updating you on my public platform on how we are going to be going about taking advantage of that move. So at this point in time, that level at the 1.242 level is serving as our new platform for buying opportunity for this week. So let's see how price action plays out in that regard. Now, in as much as we're still looking out for buying opportunity on this one, we can't ignore the potentials of the sellers too as well. And from this current structure in the market, what do we want to be seeing here that will make us believe that a bearish momentum might likely be coming in at any point in time? So what we are going to be seeing here to sell the GBPUSD is to see price action take us out of our buy position, hereby breaking down that bullish trend line, which I said earlier is supposed to be serving as our yardstick for trading activity today. So if a breakdown of this trend line happens, then price will have dropped below the 1.2420 level, and if this happens, we want to be getting ready to join a bearish move. But remember, we are not getting too excited by joining right away or having a sell stop order around that area. We still need some confirmation to happen to give us that confidence to join that sell move, and we might likely be seeing something like a retest of that trend line at the 1.2420 level, where selling pressure resumes below the structure on our lower time frame, where we start seeing signs that buyers are finding it difficult to climb above the 1.2420 level. Then at this point, we shall feel comfortable selling the GBPUSD. So you could have your sell stop order below the 1.2400 level when this whole setup finally matures. Then that will help us to join that bearish move to the downside. But I doubt if this will be happening today at all. But if it does happen, let's get ready to be part of that move as well. So that is that on the GBPUSD for today, and let's dive right into the next pair, which is the XAUUSD. So right now we are on the XAUUSD chart, 1 hour time frame, and this was what we saw during the live session yesterday. If you had watched my video on the XAUUSD during the course of the weekend, you will remember I laid emphasis on the importance of the $2,000 mark, which is supposed to be serving as our yardstick for trading activity for this week. So Let me scale up a little bit into the 4 hours time frame so that you can see how important that $2,000 level is from this current structure. So this is the $2,000 mark here, and hold on a second. So this is the $2,000 mark here, and if we go to as far back as the third week of the month of March, you will see how that level has been a major determinant of price action. So initially it was a selling niche here. We saw it in the here too as well. It was a selling niche before the breakout of the structure happened. We saw buy pressure here, and during the course of last week's trading session, we saw our price closed at exactly that $2,000 mark. And one other thing that makes this whole structure very interesting, hold on a second, let me bring this in. One thing that makes the $2,000 level very interesting is the fact that it shares a beautiful confluence with that bullish trend line that has been supporting that momentum for the last 3 to 4 weeks. And like I told you yesterday, we are at a very critical point in the market right now where anything could actually happen. We could see price break down that structure to the downside to inside a bearish momentum. That is one scenario. And we could see buy pressure resume from that structure to inside a trend continuation to the upside. And if we look at what has been happening in this market since the New York session yesterday, you would observe that though we had a breakdown of that channel, of that trend line, though we had a breakout here during the New York session yesterday, but one thing you would observe is that as soon as price action broke down that structure, we saw a sharp rejection of that zone, hereby making that candle to close in the form of a shooting star. And from a technical standpoint, a shooting star candle is a sign that emphasizes the strength of the buyers in this area. And after the shooting star candle, what did we see afterward? We continue to see buy pressure resume after that level, pushing price further to the upside. And at this point in time, it's looking more bullish than bearish in this market. And for those who are taking advantage of that bullish momentum at the $2,000 mark, well done to you for being on standby to have caught that move. And for those who had missed out, then I will advise you to be having your buy stop order above the $2,006 mark with the hope that price action will break out of that structure to trigger our position. And you could be having your TP target around the $2,025 or the $2,048 mark. Anywhere between this area seems most appropriate for a TP target on this current position. So on the XAUUSD today, we are looking bullish on the XAUUSD. So anything above the $2,000 mark seems most appropriate to buy the XAUUSD for today. Now let's scale down to the 1 hour time frame to see what has been happening here in the last 24 hours rather. So here we are on the XAUUSD chart, and this is what we saw during the live session yesterday. We saw price action trapped within the $2,006 level and the $1,996 before the breakout of the structure happened. And one thing we said here, this was during the live session. We were around here during the live session yesterday, and I told us all that we are going to be patient here to see how price action will be reacting to the $2,006 mark to decide if this is going to turn out to be a trend continuation to the upside or it's going to be going to the downside at this point. And to buttress this and make things a little bit easy for us to identify trading opportunities, we saw a simple structure on the 30 minutes time frame yesterday. Let me bring that up quickly so that we can see things more clearly. So this was what we saw on the 30 minutes time frame yesterday, and so this was the breakout of that $2,007 mark. And I told us all yesterday that a breakdown that we should be having a sell stop order below the $2,007 level to join that bearish move to the downside. So for the sake of clarity, let's look at the publication on the TradingView platform where I emphasize this expectation. So this is it here. All right, so this is it this is the 15-minute outlook. This was immediately after our live session yesterday. So I said buy stop order above the 2015 to buy, or sell stop order below the 2007 to sell. And that is how we had our first sell position triggered. Hold on a second. Okay, here it is. We had a sell position triggered. That's how we joined that bearish move to the downside. And we also thought of adding more position at the breakdown of the 1996. And as you can see, we had the breakdown of that structure. I informed us all here that we should be moving our stop loss to secure the current sell position. And if you had done so, the buy pressure that took us out of that position this morning would have made you make at least some small profit on the XAUUSD. So that is how we had the first 24 hours on the XAUUSD. So it was quite a profitable trade for us. And in the last since the later part of the New York session, we have been witnessing a bullish momentum here as price action had continued to find higher highs. Now, with this whole situation here, how do we intend to trade the XAUUSD today? Well, the first thing I would like to do here is to acknowledge the fact that price action has been bullish since the New York session yesterday, and to acknowledge that we want to be connecting the series of higher lows here. So this is one. I think we are going to be having a couple of trend lines here. Let's see if that is going to be the case. I think it's only one we are going to be having. So let's acknowledge the higher lows in this market. So here we are connecting the series of higher lows in this market. Then we bring back our candle chart to do some readjustment to the structure. So we should be having something like this. So going into the London and New York session today, we have a very simple yardstick now in the form of that trend line, where anything above that trend line will give us an opportunity to buy and add more position to our existing trade. And if at any point in time price action breaks down that trend line, we shall be looking out for selling opportunities in this market. So now that we have the situation here, and for those who had bought at the 1996, well done to you for being on standby to have caught that move. All you want to be doing right now is to move your stop loss to your entry point, secure this current position, while we look out for more opportunities in this market. And for those who had missed out on that opportunity, well, at this point, my advice here is that we should be having a buy stop order above the $2007 mark area here, where a breakout of that structure for the second time this week has a high tendency of inciting a very strong move to the upside. So a buy stop order above $2007 mark level is what I'm looking forward to right now. And if price action continues further to the upside, then a breakout of the 2015 level will welcome more buy opportunity in this market. But be rest assured that I will be with you in the comment section on my Trading View and Telegram platform to give you updates if anything strange happens around this area. Then, in as much as we are looking out for buying opportunity here, we should not ignore the potentials of the sellers too as well. Now, if sellers are going to be coming in this market, what are we going to be seeing on this chart that will give us that confidence to be part of a bearish move? Now, looking at the structure here, looking at what has been happening here since the beginning of the week, you can see that we had a strong impulsive move to the downside yesterday. And this whole move here could turn out to be a retracement of that impulsive move, where the resumption of selling pressure around this area could incite a bearish move. And the only thing that we want to see here that will make us to sell the XAUUSD today is to see price action break down this bullish trend line. And if we look at the structure closely, I think I have a level here that we can use to guide our trading activity for any bearish move here, and that is the $2001 mark here. So we have a $2001 mark level here, which we are going to be using to guide our trading activity for today. So for the sake of clarity, let's label that, and then have our sell breakdown retest illustration here. So with a sell stop order below that structure, no, sorry about that, we are not having a sell stop order yet. What we are going to be doing here is to wait for confirmations to happen. Okay, so we want to see price action break down the trend line to the downside, retest of the structure, then we want to be joining that decline to the downside. So this is what we are going to be seeing on this chart that will make us to sell the XAUUSD today. Then a further breakdown of the 1,996 will work on more selling opportunities in this market. So this is how we are going to be selling. As long as price remain above the bullish trend line, we feel comfortable in our buy position. But if the bullish trend line at any point in time gets breached and price action drops below that structure, then we shall be scaling down to a much more lower time frame. Look out for selling pressure below the $2,001 mark, and we can join that decline to the downside. So that is how we are going to be selling the XAUUSD today. But for now, we are holding on to a bullish bias and hoping that price action will break out of the $2,007 mark, where we already have a buy stop order to join that bullish momentum to the upside. So let's see how price action plays out, and I'll definitely be with you in the comment section on my public platform to give you an update on what to do and how I think price action would evolve. So with that being said, here I will be going into the last pair for today, which is the USDJPY. And on the USDJPY, we bought the USDJPY yesterday, and this was how we bought it after we identified a channel. Remember, at the beginning of the week, we identified a simple setup on the 4 hours time frame, which was on the daily time frame, I think, which was more of a reversal pattern. That is why I implore us to watch my videos, my weekend videos, where I illustrated in details on how we are going to be buying the USDJPY. But for the sake of those who are just joining us for the first time, let's run through that daily time frame to see what I saw there that gave me that reversal pattern that we saw on the daily time frame. So this is the daily time frame here. I will just quickly run through this. I'm already out of time here, so we have I have another session coming up in about 40 minutes from now, and I need to get myself prepared for that session. So let's just quickly run through this. And this is the daily time frame here, and this was what I identified during the course of the weekend. We saw the breakout of that trend line here, which was a beautiful sign that the trend line may no longer have the capacity to continue to hold that bearish momentum. And from a technical standpoint, we expect price to do some retest of that trend line to give us a confirmation of a reversal pattern to join the second wave of that bullish momentum. And if we look at what was happening here since the month of March, we can see we had a potential reversal pattern around this area. And with that structure identified there, you know what we do next. We want to identify the neckline of that reversal pattern, which happens to be the structure at the 133.800 level. And for this reversal pattern to be valid and for us to confirm that we are good to buy, we want to see price action break out to retest the 133.800. And as you can see, what has been happening since the beginning of this week, we already have a breakout of that structure, which we were also part of that bullish move to the upside. Now the question is, will this breakout last long, or is this going to be a false breakout? So one thing about this structure is that anywhere above the 133.800 still looks more bullish for me. And in order to understand what is really going on around this area, we would want to scale back down into our 1 hour time frame. Now, scaling back into the 1 hour time frame to see how the market has reacted to that 133.800 level. So this is what we had here. So the first thing we did at the beginning of the week was to try to map out what the market has been doing above the 133.800. And obviously we saw this consolidation phase here where price action was trapped within the 134.200 level and the 133.710 area. And you all know what we look out for whenever we have this kind of simple setup. We want to see price action either break out of that channel for a buy opportunity or break down the channel for a selling opportunity. So with our buy stop order above the 134.200 level, we had our first buy position for the week, which actually saw price action move about 50 pips in our favor before we begin to see the sell pressure resume at around the 134.550 level. And I immediately shared the update on my public platform yesterday, telling us all to secure all our buy positions by moving our stop loss accordingly. Now let's look at the public platform here to see how we so we had our buy position triggered here, and I said time to secure buy position, so you'll definitely have moved your stop loss accordingly to lock in some profit. And during the early hours of today, we saw selling pressure resume as buyers find it difficult to break out of the 134.550 level. And at this point, we were taking out of our sell position. So our buy positions rather. So what I said here is that we are going to be selling the breakdown retest of the 134.200 area. And if you had done that, you would have had a sell position triggered. So I had a sell stop order here before I began the live session. So I have a position triggered already at this point, as you can see right now. So let's hope that price action will continue in that way. Everything is all about risk here, so ensure you have a very reasonable risk size on this one, and let's see how this is going to play out going forward. Now if price action continues like that, I hope your sell stop order below the 133.710 is still valid. Hope you still have it there. Hope you have not deleted it. So we are going to be looking for more opportunities at the breakdown retest of that level. So on the USDJPY so far now, we are looking bearish at this particular point in time. But if anything happened in such a way that buyers gradually come into this market, taking us out of our sell position, let's have a buy stop order above the 134.550 level, where a breakout of that level would have taken out all the sell position that we have been witnessing here since the early hours of this morning. So let's see how price action plays out from this current structure. So right now we are bearish. We already have a sell stop triggered at this particular point in time, and we are looking forward to more opportunities at the breakdown of the 133.710 to add more positions to our existing trade. However, I also mentioned that if price action takes us out of our sell position as buyers continue to push price to the upside, then we have a buy stop order above the 134.550, which will trigger our buy position and probably trigger the second wave of that bullish momentum for this week. So let's see how price action plays out from this moment, and be rest assured that I will be with you right in the comment section on my TradingView platform and Telegram platform to give you updates on what my expectations are. I can see Amin's comment: in US oil 5 minutes time frame breakout has been observed and a retest has been seen too. What will be your advice now? Well, breakout retest, you don't need any advice. Breakout retest gives you a confirmations to sell. There's no advice. let's see what's happening there. You don't doubt your moves. You don't doubt your moves. You move right in. Once price action gives you that confirmation, you move right in. So we already have a breakdown already, and price action is back into the breakout of structure. So it's already a confirmation that we are good here. So price has come back to do retest of structure. So what you are going to be doing right now is you have your sell stop order right below the $80.60 level, and if you could have fought a stop loss of about 50 pips thereabout, where your stop loss will be just right above that resistance line at the $81 mark, then you are good to go. So have your sell stop order below the $80.60 level. Then one more thing I would like to state here is that the bullish momentum here could still go to as far as the $81 mark, or the trend line here, which was broken during the early hours of today. So if price action comes into that structure, we could see selling pressure resume around this area before the move to the downside. So that is why you should be having your stop loss anywhere above the $81 mark. So right now, I've told you, have your sell stop order below the $80.60 level, and let's watch out to see what happens. But if price continues to the upside here, then you want to be part of a selling opportunity if we start seeing selling pressure resume around the $81 area. Then if that happens, then you still have your sell stop order right below the structure. So if selling pressure resumes here, you join the sell momentum right there. I'm of the opinion that this would lead to the breakdown of the structure, where we already have a sell stop order to join that continuation to the downside. So it's a very simple setup. There is no point doubting your expectations here. As long as price action respects your technical expectation, just dive right into it and join it. Every move is a risk. You can afford to risk it, and ensure that you are not risking something that is beyond what your emotions can handle, because if you do that, then definitely you will not be able to manage that trade very well. So most of the time, I always advise you to risk between 1% to 2% of your portfolio size on any positions you are taking on any financial instrument. So once price action respects your structure, respects your technical expectation, don't doubt it. Just move right in, take advantage of that opportunity, and hope that price action will move in your favor. So that is that on the US oil. I hope I answered your questions. Hamin, are you still out there? Let me know in the comment section if you are still there. So on this note, I want to be calling it a day here. It has been a wonderful moment and a very, very long session, as I've just taken it into some of my private time right now, but it's okay. We are all good at this point. So do have a wonderful day, everyone, and I wish you best of luck during the New York session, and looking forward to seeing you right in the comment section on my public platform as we continue to monitor price action. Do have a wonderful day, everyone. Bye bye.